why doing a 1031 exchange may be smart financial planning. When selling real estate investment property, investors generally have two options. One, pay the taxes on any gains from the sale, or two, conduct a 1031 exchange and defer the taxes owed. There are generally two major points to keep in mind before choosing to pay the taxes rather than defer: the amount of taxes you might have to pay and the opportunity cost of any amount you pay in taxes. When an investor pays taxes that could otherwise be deferred, they are left with less capital that could otherwise be used for investment purposes that could potentially generate more return for them. For example, suppose you sell an investment property for $1 million and opt to pay the $200,000 in taxes on the sale. You then take the $800,000 in cash remaining and invest it in some investment that pays 5% annual interest. Based on this example, you should make a return of $40,000 per year. However, if you have completed a 1031 exchange into a Delaware Statutory Trust paying 5% annually, for example, your annual return should be $50,000, a difference of $10,000. Before you decide to pay any owed taxes on the sale of an investment property, rather than completing a 1031 exchange and deferring those taxes, you should consult your professional tax advisor.
This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC, member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.